This is the inaugural session and launch really of the Digital Pound Foundation. We did formally launch a few weeks ago, but this is our first official event. So we're really delighted to be able to hold this session and to be able to have so many people joining us from the membership of the foundation, from the originating members and the companies, and all the people that have joined us from all over the world and all the questions everyone sent in. So thank you very much, first of all, for that. It's a very exciting and topical time to be discussing a digital pound. We've had announcements today from the Bank of England about some of the kind of plans that they're laying out. There's also been discussions in the Houses of Parliament this week on this topic. Obviously, there's many projects launching around the world, as already been mentioned in the chat, digital dollar, digital euro, projects going on in lots of different countries. So I'm not going to talk to you much now, but I'm going to hand over the floor to Jeremy Wilson, our chairman, who's going to open the session and give us his view of why digital pound is important and why he wanted to start up and get involved in the Digital Pound Foundation. So Jeremy, the floor is yours now.
Thank you, Helen. Thanks very much indeed. Can you hear me? Yep. Yep, very good. Well, welcome everybody, and I'm conscious of the fact that there are probably going to be many more joining over the next 5 to 10 minutes, but Helen is quite right. We need to kick off. We've got quite a lot to cover. So a big welcome and thank you very much for coming today. I'm Jeremy Wilson. I retired from Barclays Bank as vice chairman of the corporate bank 2 years ago after 47 years there. And in my last 10 years there, and in the 2 years since, it has been my privilege and good fortune to be involved in some of the most remarkable developments at the frontiers of the financial services industry. So when I was asked to chair the Digital Pound Foundation through its formation, it was hard to say no. Now, rather than parrot the official blurb in your invitation to today's webinar, I thought it may help to give you a high-level perspective on the foundation and its genesis. Now, my fingers are crossed here a bit that it chimes with Will Lovell's perspective at the Bank of England in a minute or two, including some of the views I express over the next minute or two myself. The concept of a digital sovereign currency is just one more step on the road to what, for want of a better term, is a new operating system evolving for this planet. So you can't look at it in isolation. New technologies are colliding, and jostling for position in this new system. And in its final shape, it will be more efficient, more effective, and more inclusive than anything humankind has come up with in its history. And it seems to me that there is now an inevitability about the direction of travel as this thing unfolds. So it was also inevitable that a transformation on this scale would call for a new form of money. Current money forms do not have the functionality that the emerging operating system demands. It was also inevitable, therefore, that someone would invent a form of money that did have that functionality. Now, I don't think I need to go into the history here and to this audience, other than note Satoshi Nakamoto's groundbreaking invention made manifest in Bitcoin, adoption of the invention by the private sector, notably Facebook in what is now Diem, and the scrutiny of the entire dimension of a new form of money by the central banking sector across the planet. At this point, the need for something like the Digital Pound Foundation began to emerge, as it has done elsewhere in other jurisdictions for other sovereign digital currencies. And at this point, it is also worth reminding ourselves that money is the servant of our species. Now, I use the word servant deliberately. It is there to serve a need, whether as a measure of wealth or as a mechanism for exchanging value. It is not an end in itself. It is so ubiquitous, as I said, it involves everyone and everything, that it needs careful handling. Because mishandled, money is toxic. History, right up to the financial crises of the last decade, is punctuated by the poisonous effects of mishandled money. Yet, as is so often the case with new forms of anything, it was born in the private sector. and self-interest is the engine of the private sector. It was therefore inevitable that the custodians of society, governments and their appointed agencies, would engage, because it is they who must speak for the interests of all their citizens. And that brings us to central bank digital currencies. Now, government is an agency of the people. The central banks are the agency of government. If money is toxic, those whom it touches need protecting. And it is the job of government and their central banks to keep money safe, stable, and secure for anyone handling it. They do so in the interest of society and not of specific special interest groups. And certainly not, of course, of the criminal. Now, the UK is well advanced on that road. The Bank of England is doing heaps, as we'll talk to in a minute. It has assembled a formidable array of stakeholders across society to inform it in the execution of its task. And as the Economic Secretary to the UK Treasury, John Glenn, said earlier on in a statement he recently made yesterday, he made it clear, and it was about CBDCs, that the British government is taking this seriously as well. So the Digital Pound Foundation is there not to duplicate or overlap what the Bank of England is doing, but to support it. Now, that support covers everything from discussion to dissent to endorsement, and is founded in practical, pragmatic application. Something as profound as this, the introduction of a new form of money, must plumb the breadth and depth of experience, expertise, and enterprise available. And the foundation is not an industry body. Its canvas spans all sectors of society, including all the profound moral and ethical implications that brings. So the foundation will bring perspectives from geekery to seasoned practitioners to serve the introduction of a new form of money. And I personally am happy to serve in its early stages, a development which will over time, and it will take time, and I certainly won't be here for all of that, add to the benefits which this new operating system and the new forms of money within it will bring to everyone as we seek to live together on one small planet. So in short, don't look at the sovereign digital currency or any other tokens serving as currency. The foundation will look at all of those, not just CBDCs. Don't look at the sovereign digital currency or other forms of currency as a single silo or series of silos. It is one component of a much larger evolution in the fabric supporting and indeed changing our species. But as money, it needs all the care and responsible stewardship which the species can provide. And that is why the Digital Pound Foundation has been formed. So again, thank you for coming, and I much look forward to the rest of the session. Helen, many thanks.
Thanks so much, Jeremy, and thanks for your work leading this and getting it off the ground. It's been a lot of work behind the scenes to get this foundation together, and it requires someone who's a strong chair to pull everyone together. So I know the members of the organisation who are already there are grateful for your leadership. We're very grateful to have Will Lovell here today from the Bank of England. Obviously, we can't have a digital pound without the central bank. And there's a lot been going on in terms of launching different engagement forums, different announcements. And I know some of the questions in the chat are around how long it will take. What's the time frame? Someone asking, is the time frame of the second half of this decade fitting in with what the foundation hopes and expects? So Will, would you take us through perhaps a little bit of the Bank of England's perspective and what your current plans are?
Certainly, and thank you very much. First of all, I'd like to thank Jeremy and Jana and Helen and everyone at the Digital Pound Foundation for the opportunity to come and speak at your inaugural webinar. When I look at the range of backgrounds of the founding members and it covering such diverse areas as finance, law and technology in both the private and public sectors, I think it tells a really powerful story about the need to collaborate on this. And when I look at the depth of experience as well, I feel quite humbled as being asked to give the initial address. But the question, why does the UK need a digital pound, I think gets to the heart of so much of the task ahead of us. Because there's a contrasting view that says we don't need one. It says that the current arrangements work well and that perhaps this is a solution in search of a problem. But when we look at the pace of technological change, and as we look at the kinds of forces that have brought forums such as this together, I think we can see that something much bigger is going on. So ultimately, the question that the Bank of England is grappling with is, will a central bank digital currency, a CBDC, present sufficient net benefits to justify its introduction? Now, at this point, I have to emphasize that we haven't yet decided whether or not that we're going to launch a CBDC in the UK. As you've seen from yesterday's announcement, the Treasury and the bank are set to launch a consultation next year, which will set out our assessment of the case for CBDC, the merits of further work, and to develop our operational and our technical models for that. We're going to be looking at the main issues at hand, consider the high-level design features and the possible benefits. That consultation will then be followed by a technical specification. And as Helen just mentioned, yesterday's announcement sets out a timetable for any possible launch being no earlier than the second half of the decade. And we can get into that a little bit maybe in the questions, but hopefully what I'm going to set out now in the next few minutes will show how we're going to get through that period between then and now, some of the questions. But fundamentally, I don't yet have an answer to whether a central bank digital currency gives the net benefits to justify its introduction. At least I don't have that today. But what I can do is tell you how we're looking at that question and why events such as this one and audiences such as yourselves are going to be an important part of it. So beginning a little bit, as Jeremy did right at the beginning, we've got to remember that money is a social convention rather than a purely financial one. And even those of us who work in finance or have studied economics will have begun our understanding money actually much, much earlier than that with pocket money or an allowance and so forth. And we've built it from there. But fundamentally, access to secure and trusted money is an essential part of how we live our day-to-day lives. And this makes the implication of introducing a CBDC profound and far-reaching. So the questions that we have to consider go far beyond what's normally a relatively narrow remit of the central bank. I don't think anybody here needs me to tell them that UK payments and in fact global payments are changing. In the retail sphere here in the UK, electronic payments overtook physical cash in 2016, and the gap has been growing ever since. It's been hastened by the pandemic, but it's a trend that was there already. On the wholesale side, payments have been effectively electronic for a very, very long time, and central bank reserve accounts already provide a digital version of central bank money. Now, as I said earlier, there's a view of this world that says that the evolution in payments has taken us a long way, particularly in the UK. We've gone from check clearing, paper clearing, through electronic clearing, through to instant payments, an evolution over time. Similarly, we've gone from back and forward carbon paper card machines through debit cards to contactless to PayPal on a similar sort of evolutionary path. So evolution could have a part to play. But there's another view that the roots of all our current payment methods are in the pre-internet era, and that there are frictions and inefficiencies that evolution either can't address, or at least can't address without additional and possibly unacceptable risks. We have to look at the decline in the usage of cash, and I should again emphasize, Bank of England absolutely stands behind the production of cash. This is not about phasing out physical banknotes. This is about addressing the evolution in demand. But the demands of that digital economy need something new. And that something has to coexist with current means of payment and should operate in an open and secure and resilient and transparent environment. It needs to be competitive and promote choice and diversity in payment options. So in the UK, a CBDC would be a digital payment instrument issued by and a liability of the Bank of England, and it'll be denominated in sterling. So for the avoidance of doubt, and in spite of the Britcoin nickname that makes nice newspaper headlines, a UK CBDC is absolutely not a crypto asset. The fact that a CBDC is a direct liability of the central bank is significant, and it's something that sometimes gets lost. There could be privately issued instruments that might have similar economic properties to a CBDC. Sometimes these are called synthetic CBDCs or reserve-backed stablecoins. But the defining nature of a CBDC is, in our view, its publicly issued nature and the security that it gives of a direct claim on the central bank. Now, maintaining access to central bank money is an important policy objective, not just because the public appear to value it, and they do, but fundamentally because central bank money enables safe and trusted payments, and that is the bedrock of financial stability. So a moment ago, I said that the question of digital currency reaches far beyond the remit of a central bank, and then here I am talking about financial stability. So when we say that the questions go beyond the remit of a central bank, what I'm really saying is that CBDC must be useful to and used by households and businesses. So it doesn't matter how powerful the policy case is. If a CBDC doesn't deliver features that users find compelling, then it's going to fail to gain adoption at a scale, and those policy benefits are not realized. In short, you can't deliver a policy outcome with a currency or a medium that no one is using. So we've got to think about policy benefits and outcomes, but we also have to think about usability and user experience. Now, it would be wrong to say that the Bank of England has no experience of doing this. Banknote design and an issue is an obvious example of where we interact directly with the public, and we need to get it right. But as far as technological system goes, CBDCs and retail CBDCs take us into a new territory, and we need to be aware of that, and we need to organize ourselves accordingly. So I want to talk you through what we're doing specifically to do that. The first thing to talk about is the task force. So the task force was launched earlier in the year by the UK government, and it's led jointly by the UK Treasury and the Bank of England. And its job is to guide the work that goes into this case for a UK CBDC. Sitting below the task force is something called the Engagement Forum and the Technology Forum. So the Engagement Forum includes people from industry, civil society, and academia. And its purpose really is to gather strategic input on policy considerations and functional requirements for CBDC. And it's going to have an important role in helping the bank and the Treasury understand the practical challenges of designing and implementing and operating a CBDC. The Technology Forum, which is the one that I sit on because my background is ultimately technology and engineering, gathers input on all the technology aspects of CBDC from a diverse cross-section of expertise and perspectives. And that forum will help the bank to understand the technological challenges of designing and implementing and operating CBDC. So this is not just a technology project, it's also a policy project, it's also a usability project, it's also a functional project. It's very broad reaching. So what are those groups going to do? What are we actually doing to get ourselves to that consultation and possibly to that eventual launch to build that case? Can think of it under 5 headings. So the first one is about the collaboration across UK authorities. As I said earlier, CBDC has implications that reach far beyond the mandate of the central bank. So we need to draw on the experiences and insights and expertise and input from right across UK authorities, across UK government. And that's what the Treasury and the Bank of England and Task Force will be doing. That's the vehicle for that first heading. The second is listening to a diverse group of experts. The important words here being listen and diverse. So we've established the CBDC Engagement Forum to take that strategic input from senior stakeholders across society and the economy. And that's really important about getting those insights, advice and concerns from all relevant groups, not just financial institutions. The third part is about hearing from users. So we've already published 2 discussion papers that have sought feedback from a wide cross-section of society, and we've complemented that with open to everyone webinars where people can ask questions, and consumer-facing media, things like Moneybox and Which Magazine, places like that. But that's just the start. As we move forward with this project, we're going to do more structured consumer research, including surveys, focus groups, and ongoing engagement with the public as our thinking evolves. The fourth, and this is really important, is learning from international experience. I saw in the chat box people checking in at the start. It was great to see how global the audience is today. And, CBDC and development of CBDC is certainly a global phenomenon. And there are real life projects in places like Jamaica, Eastern Caribbean, Bahamas, Nigeria. And even though the context and objectives for those projects might differ from the UK, the expertise and experience that they're building by doing real life implementations is invaluable, and we want to learn from those CBDC thought leaders. There are also wider international collaborations that are really important, such as the 2021 G7 principles that have been developed under the UK presidency, and also the recent reports by the Bank of International Settlements, which we've been participating in. The fifth heading is probably a little bit further out, and that is CBDC testing. Now, before that can happen, we're going to have a clearer idea about what the case is, so we know what we're trying to test. I don't think we're so interested in sort of publicity-seeking proofs of concept. When we get to testing, it will be much more of real products that with a view to pilot and a view to implementation. So if we are to launch a CBDC, it would be preceded by that type of activity, extensive prototyping and piloting. But we don't have a plan for that activity yet. It's a little bit early. But were it to happen, it's probably going to be the most informative source of evidence of them all. So I hope these remarks have given you an insight into the questions that we're thinking about in the Bank of England, and the structure for that thinking as we explore the case for CBDC. You probably noted the lack of concrete answers today, but what I hope I managed to convey is the scope of what we're doing, and the need to get the positioning correct and how we're going about that. I'm also hopeful that through the further sessions we've got this afternoon, I will have heard many expert insights that will equip me to help find some of those answers. But other than that, I think I'm ready to hand back.
Well, thank you very much. I think it was very, very useful to have such detail about what is planned and the approach the bank is taking, and also I think a couple of clarifications to questions that people had in the Q&A. So a digital pound is not a crypto asset or a cryptocurrency. I think that was something that came up in questions. It also doesn't mean the end of physical cash. So you'll still be able to go out and earn money for washing people's cars at the weekends or something like that somebody was asking. So it's not that children won't be able to hold a physical coin or note in their hands if we have a digital pound. But I think what would be good now would be to bring in Jana Pache, who's one of the originating members of the foundation. And we're going to have a slightly longer discussion about some of the things that have come up. And I think maybe in particular, it would be good to go into those compelling features that you mentioned. What would be the features of a digital pound that would make it compelling, for businesses or for the general public? Because, you might have retail or wholesale applications of a CBDC, and those have different implications for different parts of the economy and society. But I want to kick off with Jana just by asking about, why do we need a digital pound, in the sense that people sort of feel like, well, we've already got cryptocurrencies if we want to transact peer-to-peer, and we've already got lots of electronic forms of payment, whether it's, Apple Pay or Google Pay or PayPal, or, we can do lots of electronic transactions. So people sort of feel like we already have digital money in some form. So what's the difference between that or cryptocurrency and a digital pound?
Well, thank you, Helen. And first of all, it's so exciting to be here today after a journey of about, I think it's now about 14 months since the original cohort of originating team members got together and thought that it was actually Lee Schneider's idea. Why don't we create something to look at a digital pound in the UK? So it's been a lot of hard work, very exciting to get here today. But I want to start off with going back to the question that Will started to answer in a bit more detail, which is, why do we need digital money in the first place? I mean, after all, if I transfer money to Helen, that's a digital transaction, surely. So, all our payments today are digital. So why do we need digital money? And I think the explanation here is really, if we think back at how money has evolved over the years, it was like post-barter. As soon as we got into generic means of exchange and things like that, we started exchanging metal coins, and then eventually those were replaced by more abstracted paper notes, and eventually we had checks and things like that. And today, at the end of the day, after we've all done our bank transfers, wheelbarrows of cash are not being exchanged between the banks, but many of the payment systems that on which our banking infrastructure and financial infrastructure is built are predicated on an assumption that decades ago there were wheelbarrows of cash being exchanged at the end of the day. And this is due to the organic evolution of these systems over time. And I think there are limits on the extent to which we can modernize infrastructure that's built on outdated assumptions. Also, technology has progressed considerably over the last century or so, as we all, as very clear. And basically, if we were today to sit down and to gather the requirements for money and for payments as they stand right now, for basically exchanging value and transacting between individuals, between businesses, between governments and individuals and businesses. And we were also to consider, from a technological perspective, what we can actually deliver today. That would probably look quite different to the payment systems and the infrastructure that we have today. And that's the opportunity that we have with digital money, basically, is to look at the fundamentals again, look at what is technically capable and what we actually need in terms of the money we use and the payments transactions that with which we interact with each other, and to build something that's digital native and fit for purpose. And we'll also do the distinction between digital forms of fiat money, whether those are public, such as central bank digital currencies, or private in nature, such as privately issued stable coins, and cryptocurrencies. So there's a significant distinction there. We are looking not at the cryptocurrency end of the spectrum. Well, actually, that's probably a different spectrum altogether. But we're looking at digital forms of fiat money. And when I say we, I think some of our members obviously have interests in other forms of currency as well, but the Digital Pound Foundation's focus is on digital forms of fiat money. And we do see a role for both private and public forms of digital money in the future, partly because really these changes have been driven by the private sector initially. Jeremy alluded to Facebook's original announcement of Libra, which really kind of lit a fire under many central banks globally, first of all, from a regulatory perspective, and secondly, from we should really wake up to this and look into it if it's something that could actually be adopted as a widely used form of transacting payments. And we think that there is a role to be played by both public and private forms of digital money going forward. And this reflects the system that we have today. So we have both in place today. Most of us actually, most of the time, will be using commercial bank money, which is private money. When we transfer money from accounts or when we manage our own accounts, that's all commercial bank money. It's not central bank money that we're using. And in future, there will be a role going forward as well for the private sector to play. Given the timelines, I think that were announced today, and the fact that if the UK were to introduce a CBDC, it's likely to only come into effect or be fully implemented from the second half of this decade. In private sector terms, that's a very long time. We'll probably see the introduction of at least several systemically important stablecoins during that time. And I think that also goes back to Will's original point. Many people are asking, why do we even need a CBDC? Is it a problem is it a solution that's looking for a problem? And my answer to that would be, it's already happening. The private solutions that we are seeing at the moment, things like DM, are coming into existence to address the use cases for new forms of digital money already today. And so that question is a bit of a moot one, really. In terms of the benefits of new forms of digital money, be they CBDC or privately issued stablecoins, programmability is a huge possibility, and that really opens up the ability to deliver many use cases. We can, when we look at other frontier technologies at the moment, such as artificial intelligence, the Internet of Things, DLT, and look at how we can use those in combination with programmable money, we can start looking at embedded payments, building that out, and really redefining the way that individuals transact with each other and with businesses and with governments as well. I know that certainly certain areas of government are very interested in the way that policy delivery could be transformed using new forms of digital money. So that's a bit on the use case side of things. I think on the whole, the Digital Pound Foundation has an interest not only in CBDC, but in the introduction of an ecosystem for new forms of digital money in general, both public and private, that is diverse and that fosters innovation and competition. And that's what we as a group would like to work together to promote, to work with regulators and policymakers to explore the opportunities for that, because there is a risk, there is a danger that with the introduction of large systemically important stable coins, actually barriers will be created. There will be increased fragmentation. There will be, the introduction of new walled gardens, and that could be a perverse outcome, really. Instead of realizing the benefits associated with these forms of digital money, it could actually lead to greater exclusion and less choice for consumers.
Thank you, Jana. I want to kind of come in with a couple of follow-up questions that have come in during the Q&A. One is, is there really much difference between a CBDC and a privately issued stablecoin other than who the issuer is? So that maybe either you or Will could pick up on that. And the other question, I think from David Birch, that we had in the registration questions was, I think it's unlikely there will be a digital pound. The requirements and constraints on wholesale, retail and other kinds of digital currencies are so completely different. Does the team think that a single digital pound is optimal for all use cases? So I'd love to get your thoughts on that as well. If anybody wants to chip in, maybe Will, you want to start?
I'll go first. So what's the difference? I mean, other than who issues it, that's quite a big difference. And I think that was one of the points I was trying to pull out in my opening remarks. So if you have a central bank digital currency that is a liability of the central bank, then it's actually supported by the central bank, and it's like the promise to pay on your banknote. It guarantees that convertibility. If somebody's issuing a stable coin off their own balance sheet, you then have the risk of that, whoever that issuer is, and potentially wherever they're holding the underlying assets, it starts to open up a question about the assets that sit below the stable coin the value of those and the custody of those. So you're introducing risk underneath that, and that's really from a sort of functional, economic function point of view, the difference. Usability could be, it just depends upon the feature design. It's a little bit like the difference between, and this is quite a UK-centric difference, you could say, what's the difference between faster payments and chats? So they're both instant payment, and the difference is faster payments is you're settling in a deferred way using commercial bank money and then just net the central bank money, whereas chaps payments go in central bank money. So the liquidity is transferred immediately. It does make a difference.
And what about the point about there being multiple types of digital pounds?
I agree with the point that there are very different use cases. Ultimately, there is £1, and that's an important point about convertibility at par. That a £10 note is the same as £10 in CBDC. It converts at 1 to 1, and we don't have one of these sort of stable coin situations where you've got a spreads between different kinds. So in that sense, they are all liabilities of the central bank, and they're all and all pounds are the same. In another sense, in terms of the features and functionality, I think we could see that being surfaced in different ways. There's something called the platform model that was in our discussion papers last year that talks about this idea of having fundamentally the central bank holding the master ledger of the money in issue, but having payment infrastructure providers, PIPs, that provide wallets and access to that money in different forms, so that we can try and get the safety and stability of the central bank doing the thing that only we can do, but actually the innovation and the product development in a sort of competitive market of payment infrastructure providers. So that's the sort of guiding thought that we've got there that we've put into that consultation, and I see that as being the way that we address, if you like, the different form factors of the digital pound, so to speak.
Did you want to add something, Jana?
Yeah, just to add to that, I think the point that Will made about functionality and design and what that offers is really important, because it could be that certain design choices are made for a CBDC that mean that stable coins, for example, can, under certain circumstances, provide a preferable alternative. So, for example, if a CBDC is introduced that's not programmable, but there are options for programmable stable coins, for example, as long as there's appropriate prudential regulation in place, which is also something that HMT and the Bank of England are working on at the moment, then that might drive user choices as well. And so we could see an ecosystem, basically, where different forms of different stable coins or different issuers of stable coins introduce different features. That introduces more competition as well, but also it creates certain niches for certain features of stable coins as well.
Very interesting. Yeah. I mean, there's so many options, aren't there, Jeremy?
Yes, Helen, I thought, and they're actually really good answers to this. Maybe just one other observation, of course, is that this is not a pound coin or a pound note. This is a pretty sophisticated technological device, and that gives it extraordinary scope. And by scope, in terms of my comments earlier on, where this fits into a much larger operating system, it does, because there's the amount of work now going into an understanding of digital identity, for example, to prove that somebody is who they say they are in a most slick and efficient and quick way that you can. And I don't know if Dave Birch is on this, but Dave is very, very good on this stuff.
Dave is here listening in, yes.
Right. That functionality, if you put those two together, make a functionality for a coin or a currency that we haven't had before. there's another one too, which is the ability to check. I mean, if I take the analogy of a currency, a digital currency being the equivalent of a drone, it's a somewhat clumsy analogy, but that drone is passing from you to me. And it goes on its journey. It's doing a number of things. It's establishing, am I who I say I am? Am I the right person? Should I be having this? It's probably establishing the bona fides of a transaction, but it also may be establishing the bona fides of the individual. In other words, are we comfortable and confident that we're not dealing with a criminal here, but we're dealing with an individual who it is legitimate to deal with? Those sound somewhat daunting, and in some cases, some people worry about the privacy components, and we haven't got time, I don't think, to go into that hugely here. My point, really, my essential point, is that this is a very interesting. The currency is different to any currency we have seen before because it has this extraordinary technological functionality. And satellite technologies are adding more and more to the potential value of this currency when it gets introduced.
Thank you, Jeremy. I think that ends us on the panel on a very good note. And we've got some more questions which we'll try and come to in the Q&A at the end. But for now, I'd just like to thank all of the panel for contributing to a great discussion. What we're going to do now is hear a bit more from our members. So I'm going to actually call on, first of all, I think it is Richard Ellis from Electroneum, who's going to talk to us about why Electroneum got involved in the foundation and what their interest is in a digital pound. So welcome, Richard.
Hi there, thanks everybody. So I'm Richard Ellis, and I'll say a few words about my history and what we've been doing, which I think then makes it perhaps obvious why we are involved. So I've had an entrepreneurial career in technology for nearly 30 years and been involved in crypto since 2014, early 2015. And in 2017, we launched a cryptocurrency called Electroneum. And that was aimed at providing more financial inclusion to the world's unbanked. And as part of that, we launched a product called anytask.com, which got tens of thousands of unbanked people selling their digital skills and being paid with ETN, this cryptocurrency. Anytask shows that the skills of the people in the developing nations are just as good as anyone else's. And sometimes their prices are even keener, I might say, but their skills are just as good. But they're excluded from this financial system. So the great price that they can provide to the global north, for instance, is also a great price to them, the seller, who's earning and spending in a completely new way. This is this whole thing we talked about earlier about unlocking new things. So they could spend, for instance, with us, they could spend their ETN straight from the app in thousands of places. There's airtime they can buy and all sorts of other things. So, but it's these developing nations that I think benefit most from digital currencies because it gives them access to the global digital economy. So this digital payment ecosystem that we've created gives Electroneum a fairly rare insight into the day-to-day use of a cryptocurrency. We've also embraced KYC and AML earlier than most projects, and anybody will understand that KYC and AML is something that's inevitable within the world of CBDCs. So as we see this world of decentralized cryptocurrencies and centralized CBDCs merging together, fusing together, I think we'd like to see how we can help these work together to make both better. So allowing that flexibility of crypto, but with the dependable known quantity of a stable coin. Of course, this digital pound is not just backed by national currency, but it's backed by the Bank of England, which is pretty exciting stuff, I think. So Electroneum is founding member of Digital Pound Foundation. Very proud to be partnered with Ripple and Quant, Billon, the other amazing team members and extraordinary skill sets that are out within this DPF project. And as members of this project, I think I share a common goal with everyone else, which is to share our collective experience and real world knowledge, which I genuinely think can help shape the future of a digital pound. Electroneum specifically really interested in the interoperability between any digital pound and the wider cryptocurrency market. And we also have something close to our hearts, which is a special interest in ensuring that the digital pound can work globally, which not only supports the strength of the British pound globally, but also ensures a wider financial inclusion goal. So I'm really looking forward to sharing our knowledge of what we're doing with the team, and as we move forwards with hopefully the Bank of England. So thank you very much for your time listening to me waffle on, and I shall hand over to everybody else. But that's our interest in the DPF. Thank you.
Thank you, Richard. And I think financial inclusion is perhaps one of the most compelling features of a potential digital pound. I think it's something that's dear to a lot of people's hearts, particularly actually in the cryptocurrency community. There's a lot of discussion of social impact, and being able to bridge between the two worlds, I think, takes us a lot further, hopefully in the direction of being able to achieve that goal of greater financial inclusion. So thanks very much for what you had to say. And actually you touched on interoperability, and I know that's something that Gilbert Verdian is passionate about. So I'm going to ask Gilbert to speak to us next from Quant.
Thank you, Alan. It's great to be here. So, my name is Gilbert, CEO at Quant. So I'm here today as excited as you can be. I've been waiting since 2008 to create a digital pound. I was at the Treasury during the financial crisis, seeing the Satoshi paper weeks after it was released, saw the potential, and got the rest of government on it. So we've been looking at this as pretty much the first government in the world to officially look at the technology weeks after it was released. So for me personally, this is a transformational moment. These evolution in systems only happens every 30 years. Right now, we're at the forefront of digital assets being integrated into financial systems. And if you look at payments globally, domestic and cross-border, there's only 56 countries that are doing real-time payments. And it's quite a long transition, as Will said, to go from cash to check and batch payments to real-time and quite expensive. But we're able to actually update global financial systems to digital assets to a modernized version to make the money that people use serve us better, because we're in a digital age. And if you look at society, we've evolved into a very digital society, especially with COVID, and money needs to evolve with us. And so the same way, our phones and our data can roam the world and work in any country, we kind of need our money to do the same. And having digital assets, CBDCs, and the UK's digital pound gives us access and makes money fit for the future. And I'm really excited to be here. We're quite active in this space. We've been working on standards, establishing the ISO standard in 2015, and more recently the MIT IETF standard that we called ODAP, Open Digital Asset Protocol. We're here to foster this adoption of blockchain and DLT and make CBDCs embedded within the financial system. It's not here to replace the financial system, and crypto and everything has its place, but digital assets and CBDCs specifically, they're here to evolve and complement the financial system. And we're looking forward to making that happen at Quant. Thank you.
Thanks, Gilbert. I think Rishi Sunak was talking about this at COP26, about restructuring the UK financial system, and maybe we can get onto this a bit more in the discussion at the end about how digital pound might fit into that. But we're grateful for your technical and business experience, as well as your policy experience in helping add that to the Foundation's research and activities. So thank you very much. Next, going to hear from David Putz from Billon Group, who's going to talk about digital cash and technology exploration.
Yeah, hi Helen, hi everybody. A few words about myself, our company, and why we joined the Digital Pound Foundation. So I'm the Chief Growth Officer of Billon Group. I'm also the chairman of our e-money businesses. So we have an e-money license in UK as well as in Poland, and we were one of the proud graduates of the FCA sandboxes in the UK. One of the things that sets us apart is that our company is both a tech company as well as a licensed company. So in our tech center in Poland, we've developed a new form of layer one blockchain, which was specifically designed to fulfill the e-money directive, which we think will ultimately be a future-proof type of a solution as we move into MiCAR regulations. And, we're very proud of the fact that we've already filed 11 patents, and recent tests show that the technology is 2.5 times faster than enterprise Ethereum and about 60% less power consumptive. And why is that important? I mean, I think it's important because as some of the earlier comments were coming through, we are on a journey of evolution. And I think it's really important to understand that this technology is getting, faster and much more resilient. Now, one of the reasons why we joined the Digital Pound Foundation is really to kind of share some of our experiences. So we've been, blessed with the fact that we have products in the areas of corporate mass payouts, loyalty payments, things of this nature. And what we discovered was that these types of systems that combine the form factor of tokenized money with, of course, identity and sovereign identity, where effectively, identity is protected. So it's known, but it's also, kept protected. This is really quite transformational when you're applying this to corporate mass payouts. So some of our clients are saving as much as 20 or 50%. So clients like, Munich Re, Philip Morris, Lovell, these types of clients. And we've been serving these clients in Poland, and we're going to be launching these products in the UK. So we're very, very excited about the Digital Pound Foundation because we believe that organizations like ourselves, that are both technology companies as well as EMI organizations, really have something to offer, because we're at the sharp end of the stick in terms of seeing what the end use cases are. And we're strong believers that at the end of the day, this is going to be an interconnected global digital economy with many, many different companies, both competing and collaborating. And so I think in the Digital Pound Foundation, we see ourselves as being an active participant, sharing our experiences, learning from others. And in that spirit, we think that the overall objective of the Digital Pound Foundation will be fulfilled, because let's say that the overall size of the pie and opportunity for everybody will be much greater as a result of the Digital Pound Foundation. So again, very, very pleased to be here, and really looking forward to moving forward from this milestone of a kickoff to now an active foundation. Thank you.
Thanks, David. And I'm just here as the moderator, but with someone, as someone who has had a policy background, I think there's often far too few kind of technical experts who are given input into policy making. And I think that, especially from a neutral platform like the foundation, one of the great benefits is being able to bring all of that business and technology and payments expertise together in this group. So I'm also looking forward to see what happens next. In terms of our speakers, our next speaker is Lee Schneider, who, as you heard, mentioned earlier, was one of the early originators of this project, and I think has seen some of the discussions around a digital dollar in the US and thought that perhaps that could be emulated here. So Lee, lovely to hear from you.
Thank you very much, Helen. Thank you, everybody, for joining today. This was a great turnout. When Jeremy and Jana and I and a few other people were originally talking about this, it sort of seemed like pie in the sky, and now it's really exciting to see it come to fruition. I'm the general counsel at Ava Labs, which is a company that does blockchain software development, and the Avalanche public blockchain is the main place where we do that software development. Our founder had a vision about the new infrastructure for the future of money, of assets, and of commerce. And that's very much reflected in the way that he architected the Avalanche software. I personally see central bank digital currencies like a digital pound as being new infrastructure for money, new infrastructure for financial services and assets, and new infrastructure for commerce. Without that new infrastructure, I think countries will end up falling behind. And so I am really active in trying to move central bank digital currencies to the fore for that reason. Ava Labs is very active in trying to move central bank digital currencies to the fore for that reason. And we see this as a way of expanding the already growing world of blockchain, of digital assets, of crypto assets, and the ability of people to communicate and engage in commerce more directly with their counterparts all around the globe. All of that's super exciting from my perspective, and it's a real pleasure to be part of the Digital Pound Foundation. And we hope that we continue the dialogue with all of you. Please be in touch. Thank you.
Thanks very much, Lee. I'm going to come to Susan now, Susan Friedman from Ripple.
Thanks, Helen. My name is Susan, and I'm the head of policy at Ripple, and we really appreciate having the opportunity to be part of the foundation and to speak today. Ripple is an enterprise software company. We utilize blockchain technology in our RippleNet solution to enable financial institutions to effect faster, cheaper, and more reliable cross-border payments. In addition to deploying RippleNet for fiat payments, some customers also choose to leverage the digital asset XRP, the native asset of the XRP ledger, which is a decentralized public blockchain, to serve as a bridge between fiat currencies. Ripple leverages XRP because of its speed, scalability, energy efficiency, and cost, all of which help reduce traditional frictions in the cross-border payments market. Earlier this year, we also announced the creation of our CBDC solution, a private ledger platform for central banks that utilizes the technology underpinning our public XRP ledger. Our full stack solution enables central banks to mint, distribute, and transact with their own digital currency. On why we think that this work is reflective of our belief that there is real opportunity for public good associated with CBDCs, which is why we're excited to be part of the foundation. On the question of whether the UK needs a digital pound, we believe, as has been echoed by other members today, that there are several benefits that digital currency, a publicly issued digital currency, has that physical equivalents do not. Unlike cash, CBDCs could enable micropayments and otherwise be programmed for specific uses to support government aims, such as delivering targeted financial stimulus to individuals and businesses. CBDCs could also foster programmable payments, enabling autonomous financial products and completely new business models not possible or even envisioned today. These new use cases have the potential to enable broader access to financial products unimpeded by legacy systems. At the same time, we recognize that implementation of a digital pound poses complex policy questions which do not have easy answers. But striking the right balance could have huge impacts, including for those considered unbanked or underbanked. To this end, we welcome yesterday's ministerial statement from John Glenn, setting out the roadmap that authorities in the UK will be following regarding the potential issuance of a digital pound. And as this work continues, we think there are 2 points worth highlighting that have also been mentioned by my colleagues. The first is interoperability. Using standardized APIs and adopting a common set of protocols will ultimately be core to any successful CBDC design and help avoid creating a closed loop system. And Ripple has seen firsthand the benefits of such an approach. Second, we believe there is an important role for the private sector to play in an open platform approach that brings together expertise and investment from different stakeholders will provide the best opportunity to build value-adding services with minimal friction from intermediaries. We're encouraged by the work that the Bank of England has already done, and we are excited to partner with the Digital Pound Foundation to tackle and help contribute to the dialogue on many of these important issues. Thank you again for the opportunity to be here today.
Thank you, Susan. I thought that point you made about the direct payments from government was very interesting, because I know there were a lot of people in the tech world very frustrated during COVID lockdowns and so on about the slowness of business recovery loans, or perhaps issuing payments to people on low incomes who have to self-isolate and can't work due to COVID. So, those are just a couple of concrete examples going back to compelling features. I'm sure we'd all be quite compelled by the idea that we could receive payment from government in those circumstances much faster and more simply than we did during the last 18 months. So I think that one alone, hopefully we're moving out and away from lockdowns now, but I'm sure there are other examples we can think of public crises where we might want to have those kind of payments. So I think that for me is really interesting. We're going to come next to Vincent Mealy from Accenture. Welcome, Vincent. Thank you very much.
Thank you, Helen. And thank you, fellow panelists and all the participants here. Thanks for holding on this long. Really appreciate the conversation and the topics that have been brought up so far. So I'm a senior manager out of the London office of Accenture, a consultancy of over 620,000 consultants around the world. And I'm part of the multi-party systems and blockchain global team, which is spread out around the world, And within that, we focus on CBDCs, digital assets, and digital currencies and custody. I'm an attorney by trade, originally in the US and now a UK solicitor, so I bring some legal background also to this. But as part of my experience with Accenture and what our team does is we've worked with a large number of central banks around the world, including Bank of Canada. We currently have a project with the Riksbank in Sweden we're in year 2 of a 6-year pilot for retail CBDC. The South African Reserve Bank, the Banque de France, and the Swiss National Bank and BIS for a cross-border offshore settlement of wholesale CBDC. And then we've also participated in a number of consultation papers for Bank of England, of course, the ECB, Riksbank, the Bank of Russia. We will be responding to the Reserve Bank of New Zealand soon. And I was also, and other members of my team were also part of and co-contributors to the Digital Dollar Projects paper of May of 2020. And I see a lot of similarities here. And, I think we bring a lot of experience from our time on that side of the pond, discussing with legislators, members of different agencies in the US, and ultimately the different sort of reserve banks in the US, the different geographic reserve banks in the US, which is somewhat of a strange system. But ultimately, just similar to, I think, the goals here for the Digital Pound Foundation, it's to influence, to begin the discussion. It's fantastic to have the Bank of England here. Thank you very much for being here, just to hear your thoughts and your direction. And where we as a global company see really a lot of the focus is on the new medium of CBDC. Banknotes have their benefits and trade-offs. The current reserve accounts have their trade-off, their benefits and trade-offs. And we see CBDC as a third form of money, a third medium, and that's really where the innovation will arise. One thing that I haven't heard really stressed today, and that I'd like to just focus on is something that the ECB said in the Digital Euro paper, which was sort of 2 very remarkable things that they intend to do that are worth that other central banks are looking at. The ECB said 2 things. One, that individuals and households would have access to the digital euro, or could have access to the digital euro, which is very interesting in and of itself. But also that they expect, or there's a potential that the digital euro could be traded and moved outside of the eurozone, and that single aspect of offshore circulation in a digital form of central bank money is where we see a tremendous amount of innovation that could happen. We're seeing it at both the wholesale level, in which, say, equity shares denominated in a foreign currency could be settled offshore without correspondent banks, but also at the individual level of remittances. And sort of as the infrastructure is laid for that, but more importantly, as central banks become comfortable with that concept and comfortable with the controls that they can have over that in order to ensure that they continue to fulfill their domestic mandates, I think we're going to see a lot of fintechs building off of that, and also a lot of commercial banks sort of re-examining their roles and the functions that they serve their customers, and that are all enabled by these central banks with this new medium. So very pleased to be here today, and thank you very much.
Thanks. I think that brought out a fascinating dimension that we haven't covered yet, and I know there were some questions in the chat about the sort of interoperability and also jurisdictions. Is the digital pound only going to be usable within UK borders? Is it going to be used in other countries? And how are different digital dollars, pounds, other currencies going to interact with each other? So I hope we can pick up on that a bit more before the end. But thank you very much, Vincent. We're next going to come to Alex Crivero from Herbert Smith Freehills, who's going to talk about the legal aspect of being involved in a digital pound.
Great, thanks, Helen. So I'm Alex Crivero, and I head up the digital law group at international law firm Herbert Smith Freehills. For context, our digital law group is a global multidisciplinary team of digitally savvy lawyers that deliver legal and regulatory advice to our clients on digital transformation and on emerging technologies such as blockchain and digital assets. And of course, that includes CBDCs, which will impact the broad base of our financial services and fintech clients, among others. We've been involved with the Digital Pound Foundation since summer 2020, so it's particularly exciting for us to be partnering with the foundation now as it launches, and to be doing so alongside such a fantastic group of voices from across the digital money ecosystem as well. And in terms of why we got involved with the foundation, a lot of it comes down to that ecosystem. Something that William picked up on earlier was the need for the Bank of England to listen to a diverse group of experts, and we completely agree with that. As a matter of generality, as a firm, we believe in the importance of diversity of thought and of experience when considering more contemporary matters relating to digital change. That's especially true for areas like digital money that, to get them right, require, we think, convergence of expertise and, of course, perspectives, whether that's social, policy, technological, legal, regulatory, ethical, tax, the list goes on. In the interest of time, I won't talk about the opportunity that digital currency offers. That's already been described so well by others here, but in fairly typical lawyer fashion, I would say, I'm going to point out that any digital currency will have to overcome a range of challenges, whether that's technological, things like interoperability that Susan and others have mentioned, or social, so as relates to the need to establish end user trust, for example. From a legal perspective, of course, we have to grapple with things like privacy, as Jeremy alluded to earlier, and cybersecurity, surveillance, human rights, and others, all of which can have implications not only for end users, but for businesses operating in the wider financial ecosystem as well. And that's where we see our voice fitting into this ecosystem. As a leading international law firm with thousands of lawyers, we bring to the conversation depth of legal and regulatory expertise across the broad range of potential challenges. And with offices worldwide, we bring the breadth of insight from different markets and from the work we do supporting our broad client base, those financial institutions and technology providers, as that digital pound starts to take shape. And with the digital pound being such a potentially significant part of the transformation of our financial services clients, their sector, and indeed our core market in which all of us operate, we think it's important that we not only contribute our own expertise, but indeed learn from the diversity of thought and experience of others, the experts that are sat with me today. And at its very core, the Digital Pound Foundation gives us all the opportunity to be part of that ecosystem and to play an active role in this potential transformation of our economy. But I'll stop there in the interest of time.
Thanks very much, Alex. And I think it all comes together: legal expertise, policy expertise, technical background, business background. These are all the talents that we need to harness if we're going to get this right. And hopefully policymakers, and obviously we've got Will with us from the Bank of England, people involved in implementation will be able to draw from that. So thanks very much for being here and for being part of the foundation. Our very last but not least speaker is Sean Devaney from CGI. So Sean, you're up next.
Thanks, Helen. So CGI, I think we come to this from a slightly different perspective than a number of other organisations that have spoken today. If you look at CGI, we're a large, not quite as large as Accenture, but we're a 70,000 person Canadian systems integration company. We do large scale IT change. We're not a blockchain provider. We're not a cryptocurrency provider. We're not quite the same as a number of the other organisations that are spoken today. But what we do bring, though, is a very long and rich history in the payments industry and in banking globally. So that goes right back to actually before we were CGI, where CGI and Logica joined together. Logica was part of the development of the original SWIFT interbank network, so the international interbank network for payments over 50 years ago. And since then, we've been right in the centre of innovation in the payments industry, from the development of CLS, the Continuous Link Settlement System, the Global FX Settlement Service, through to the Faster Payments Service in the UK. We helped design the infrastructure for the Faster Payments Service in the UK. We helped build the testing regime for SEPA in Europe, and we continue to be involved in that in the centre of payments innovation in the UK, in Europe, and globally. We're working with the Open Banking implementation entity at the moment, looking at how to progress open banking in the UK and in other geographies. So we bring a slightly different perspective. We're coming to this more from the perspective of how the payments and banks operate, so that if you want to introduce a new form of money, how are you going to move it around the network? And we think there's still a huge amount of change going on in the financial services market, not just things like CBDC, but changes to mechanisms that move money globally, regionally, and domestically. Things like drives to real-time payments. We talked about real-time payments earlier. Only 56 countries globally. I think it was Gilbert was saying only 56 countries globally are able to do real-time payments, but that's changing, right? That's becoming a much more global phenomenon. The world is moving towards more real-time payments. But we see the development of CBDCs particularly as another potentially seismic change in this market. So, we're looking to leverage our expertise in the world of payments to help the UK develop its own successful CBDC. And I've been pleased to hear people talk about, this group being a forum for debate. And I think that's going to be really important. That there will be, I hope, lots of dissenting opinions. There will, I hope, be lots of, robust debates over the coming months and years. And I'm really looking forward to being part of that. Personally, I'm really interested in the sort of anonymity and privacy aspects of CBDC and how do we address some of those challenges. So fundamentally, I would come from the position of, anonymity is good when it comes to things like this, but at least at the basis of the CBDC. But obviously, there are considerations beyond that. I mean, there needs to be some sort of traceability at some level, but I personally believe that those should be built on top of the core instrument and should be tied to parameters such as size or type of transaction. But that's an area of debate, right? And there will be lots of dissenting opinions around that. I'm also really interested in the regulatory aspect of any CBDC. I think there are a number of pretty complex issues, some of which we've talked about today, that we need to sort out before CBDCs are widely adopted. And one of the basic challenges is, who's going to be responsible for sorting those issues out? So, central banks will, and the team will have, responsibility for things like monetary policy, stuff like that, obviously, but, probably not quite so much for, privacy and anonymity. In the UK, you might have the Information Commissioner's Office would have a view on that, but probably not on accessibility, for instance. And so it goes on. There's a whole chain of potential regulatory and governance challenges that go with that. So we see there being a lot of things to decide as we come closer to implementing CBDC in the UK, and we're really looking forward to being part of that debate. And I'm really pleased to be here with a panel that I know is going to be lots of robust debate. Let's just leave it there.
I agree, and I think just what we've seen today, the breadth of different possibilities of how a CBDC could be created. That's one area of debate. What the use cases are, the governance. There's so many questions, and that's why I think a forum like this is so important, because we will be able to, hopefully, through our research papers and our events and our consultation activities, really dive into those in a lot more detail. And there'll be future events that go into some of these questions in a lot more detail. So thanks very much for being with us here today, Sean. I think we've got about 20 minutes left, in which we're going to hopefully get to some of the questions that people have asked. I'm going to try and get through as many of them as I can in the time. So I'm going to actually send the first question to Jeremy Wilson, which is, a lot of people have been asking, obviously we've just heard from many of our members, what is the role of the foundation members in terms of implementation of a CBDC or a digital pound? Does it mean that those companies will be somehow involved in the direct implementation of a digital pound? And also, what relationship does the foundation have with the Bank of England? Are we sort of working with or for the Bank of England, or are we separate from that? So it'd be great if you could just speak a little bit about that, Jeremy, just to clarify the position.
Take myself off mute. Absolutely, Helen. And if I don't, I think I can answer it relatively quickly, but if there's one component I've missed, just don't hesitate to come back to me. I think interestingly enough, the role of the members became very clear, at least it became very clear to me as they were talking and as the introductions over the course of the last 20, 30 minutes have taken place, that one of the keys to the success of this foundation will not be the promotion of self-interest of the individual enterprises. The interest of the members is primarily to share their skills and expertise and experience in the development of this phenomenon as it moves forward. If you were, any of you were privileged as I am, of course, to be in the board meetings, in the boardroom of the foundation when it meets, you'd be left in no doubts about that. This is not some sort of a stalking horse for individual enterprises to move their particular foibles and interests forward. So the point about the working with the Bank of England is that I suspect Will's not on the call, but I wouldn't never seek to put Will in a difficult situation anyway.
I think he's still here, actually.
You are.
I'm still here. Yep.
Oh, good, Will. There is no formal link between the foundation and the Bank of England. And I think that is a reflection of as Will was explaining, the bank has got some pretty powerful structures in place which span a very large constituency and a large community. The importance of something like this developing will be in the engagement of stakeholders way beyond formal structures. This touches everyone and everything, this thing. And therefore, it counts and matters that there is full-scale engagement across the piece. As Vincent was saying, you need plenty of discussion and debate about this. Now, you can either do those sorts of things individually, which I think there'll be plenty of room to do that, or you can do them as specific communities. It so happens that the foundation, when it was formed, and it didn't happen by accident, was made up of this extraordinary breadth of expertise, knowledge, and experience that you've heard, ranging all the way from the sort of legal constituency right through to some pretty sophisticated, I hope they don't mind me saying this, geeks. So we've got the full range, and I think that collaborative community, and I should include that there are representatives as well, or observers from the UK government as well. The foundation has a pretty wide spread, and I'm pretty sure that footprint will get wider as we move forward and as the whole phenomenon moves forward.
Thanks, Jeremy. So just now that we've sort of clarified that, I thought that was important, but I want to come on to some of the questions more around the implementation of digital pound. And one of the big questions that's come up is, let's assume we have a digital pound, a digital dollar, a digital euro, all these different digital currencies. Will they only work in their own specific countries, or will they work globally? And how will that sort of interoperability take place? I don't know who wants to come to that, maybe Will or somebody else from the panel earlier, but it would be great to have someone give an answer on that if you want to put your hand up.
So I'm quite happy to talk about interoperability. I think the jurisdictional question is in some ways a separate question, and I'm not massively well qualified to talk about. But I will talk about interoperability. Because I think sometimes we get hold of a notion that a payment system or a digital currency is somehow like an email system, and if you just plug all the boxes together, suddenly you've got cross-border payments, and it misses some of the problems and the challenges around cross-border payments. Now, there is the CPMI are running, that's the Committee for Payment Market Infrastructures. Good, I did remember what the acronym stood for. Is leading global work looking at this, and there are a lot of building blocks in there. I'm not going to go through every single one, but I'll quickly talk about some of the big frictions and where I think CBDCs can come in. So, first of all, there's things like being able to do anti-money laundering and fraud checks and financial crime checks as you cross border. The jurisdiction will be different in different countries because different countries have different legal systems and different requirements. In the current payment system, it's actually quite challenging, sometimes just because the data is lost. So somebody who could do a really fast check can't do that fast check because they don't have the data. So something as simple as having common data standards for interoperating will start to fix these problems. So it's not necessarily inherent to having to have a digital currency, but what happens is, I think, is the rollout of a CBDC presents us with an opportunity where we can start to hit problems like global data standards. Obviously, where you have got different currencies, there is an open market and an exchange rate between them. And again, an exchange rate isn't just something you take off a rate feed, although in implementation wise it might often feel like that. That's something that's determined by market forces and they move. And there are some really interesting pieces of work going on. I was reading over the weekend about the BIS in Hong Kong have done this proof of concept work called, I think it's called Project Lion Inathon, or Inthanon, I may have got the pronunciation wrong. Apologies to anybody who's involved, I've got that wrong. That's looking at genuinely how can you have a different digital structure that still addresses having an open market for getting the best foreign exchange rate, but actually takes a lot of those frictions out. So I think there's an argument that says fundamentally you don't need a digital currency, but actually digital currency implementations are a fantastic opportunity as we rethink these platforms, as we rethink the engineering to solve those cross-border problems in a different way. But they're not just technology problems, they are legal problems and, well, legal challenges and an actual need to address the market in FX as well.
Thanks. I just wanted to maybe do a follow-up to Jana, because someone was also asking about the role of crypto assets in interoperability. Would there be a role potentially for crypto assets? For example, someone's asking for interoperability between other countries' private CBDCs and public blockchains.
I mean, I think that's a genuine possibility and utility for cryptocurrencies and crypto assets to be used as that cross-border settlement mechanism. And if you look at some projects that are underway at the moment, such as Finality, for example, they're basically looking at solving that interoperability angle, although they're not using a cryptocurrency to do that as such. But I think that in the interoperability between different CBDCs is hugely complex and challenging, and there are many different ways that you can do it, and all of them are difficult. All of them involve creating bridges or introducing standards, and it's really difficult to do that when you've got many different CBDCs with many different designs, some of which are already underway. And so there is a potential for cryptocurrencies to create bridges as an interim measure or as a longer term measure, perhaps, and to be part of that ecosystem and enabling interoperability between CBDCs in the future. Now, as to whether there's an appetite from central banks to, for that kind of interoperability bridge to be enabled by cryptocurrencies is a different question, but technically it's possible, yes.
Thank you. I've got a really great question here from Tyler, which I think everyone probably wants to know the answer to, which is how would a digital pound affect our day-to-day lives? What would be different in a world in which a digital pound exists? What would change in our day-to-day lives?
I'm happy to kick that one off as well. Sorry, okay. Jeremy, I saw you on mute, so I'll be really quick on this. But in short, I think, for the average retail user, right now, you don't generally care whether you're using commercial bank money or central bank money. You care about the form in which it exists. So, am I using cash in my hand, or am I able to transact using this banking app, or am I able to make payments in a certain way? But you don't really care about the nature of the money. And I think in future, from the user's perspective, it should continue to be a seamless experience. You should be able to experience the benefits of a CBDC without having to think to yourself or question the existential nature of the money that you're using.
Jeremy, do you want to add to that?
Yes, I do. I'd like to go sort of deeper still, if I may. It is a really good question, and thanks for asking it. I think I just go back to the point that something very fundamental is going on around the entire operating ecosystem that we all live in at the moment. Therefore, if you go back to what money is used for, it's primarily used for transactions between us, and between businesses and so on. So it fits within a broader, a sort of broader spectrum overall. Now, what is becoming clear is that as such, and because of the technology, not least inherent within CBDCs, these currencies and the payments associated with them are disappearing into the transaction. So from a day-to-day life point of view, it will become less and less significant, the nature of the currency that you're using. I know that sounds very far-fetched, but this is the direction in which we're heading, where ultimately, if you want something, there's of course a value to be exchanged in order for you to be able to get it. But you'll press a button and a series of individual mechanisms will take place in order to make sure that whatever it is you want gets to you. And buried in that will be the payments process, and buried within that will be the currency that's using it. So that is looking a way ahead. I don't think it's looking that far ahead, but therefore, in our day-to-day existence, we may well turn around, to go back to the point from Thailand, we may well go back to the point or get to the point where actually you hardly think about it at all as a currency.
Thank you, Jeremy. I think that is an interesting way of describing it, the payments disappearing into the transaction. I think that's a very good way of summing it up. I think just to come to the end, we're nearly running out of time, but I think a couple of points that came up were around the issue of trust. So should we be asking the public about this, given that, this is a very complex technical subject and most people are not going to know a lot about central bank digital currencies? And if not, how do we kind of foster, or even if we do, how do we foster trust from the public in the idea of digital pound?
I'm happy to pitch in, and Will may have some additional thoughts on this, but I think that there's always a space for public engagement, whether it's private citizen, academia, industry. That's how you get to, I think, solid public policy solutions, because you're hearing how money is used, what problems people are having, what problems they want you to solve for. And those are all the inputs that any central bank is going to need as they think through what the issues are with respect to digital money and how it can best be implemented.
I agree, Susan. Will, did you want to make a final comment on that?
Absolutely. Public engagement is so important here. So some of the research we've done has found the more that people understand what the Bank of England does, the greater the trust they profess to hold in it. So it's really important for us to be able to do that, to explain what we're doing, to explain why we're doing it, so that people understand it. And then from that understanding is where the trust goes. Because ultimately, the handing over a banknote and then taking a banknote from a stranger is an act of trust, and it works extremely well. And we need the digital equivalent of that to work just as well.
And just since we're in COP26 mode this week and last week, we haven't really touched on the issue of sustainability. So how sustainable would a digital pound be? Would it be more or less sustainable than physical cash? And would it be acceptable to trade that off if the answer is that it's actually more energy intensive than cash?
Is that a question to me again?
I think that might be a question for you.
I'm
happy to have someone else chip in on that as well. But...
Okay, so what I can say is energy consumption is definitely one of the parameters that we are looking at to understand what the what the overall energy impact of a solution might be, both the potential, we're mainly talking about power, light and heat consumption of whatever computer infrastructure we use, but potentially where reductions might come out elsewhere. And that really comes back to the design of what we're doing. So I can't tell you that exactly what the formula will be. What I can tell you is we're working on it. What I can also tell you, as one of the G7 principles, is around to consider the environmental impact of the introduction of digital currency. So it's definitely there in the mix.
I think that's probably a topic for a whole other webinar, along with many of the other questions that I've seen. I think we've got our next 12-month program of webinars sorted. So I apologise for anyone whose question didn't get answered. But what I'm going to do now, since we're about to close, is just ask Jeremy Wilson to make a few closing remarks before we finish.
Good, thank you, Helen. Thanks very much. Actually, we've covered quite a lot of the ground. I wanted to just mention and reinforce the point that the foundation is there to serve all. And the interests of the members are very wide and very broad indeed. The second thing I want to do is somewhat more fundamental, really, is to thank all those members of the foundation for their vision and their tenacity and their belief in pulling this together. I think in particular as well, as far as today's webinar is concerned, Will, thank you for taking the time to come and talk and give us a Bank of England perspective. It's turned out to be extremely significant and important and a very worthwhile contribution. Thank you very much indeed. And I think it helps illuminate the way forward. And then the last two, because I've seen my clock is now saying 13 minutes past. Thank you to the panelists, all the panelists. Thank you to the members as well. I've done that in a way, but also I'd particularly like to thank the team who put all this together. The Realization Group, Helen, you and your team have done a remarkable job, and so have a number of other people on the sort of working side of this all. So many thanks indeed. We'll have more to come, and look forward to seeing you there. I think that takes me over my time, Helen.
Brilliant. Thank you, Jeremy. And just to close, to let you know that we do have, for those that are interested in the differences between retail and wholesale applications of CBDC, we do have a paper coming out shortly by two of our originating members. So if you want to find out more or find out more about future events, do sign up for the newsletter via the Digital Pound Foundation website if you haven't already done so. And we look forward to seeing you at many of our future events, which we hope will be both virtual and in due course in-person events where we can meet you in the real world as well. So thank you very much for everyone who came today, and look forward to continuing the discussions in our future events.